Good morning, everyone. I hope you are doing well and you are enjoying your time here at Glasgow. My name is Kamal Dadi. I'm Innovation Officer at AFD, the French Development Institution. I'm delighted to moderate this discussion and introduce our esteemed speakers. And I thank warmly IDFC Pavilion for the invitation and all the team for the organization. So we have a spontaneous discussion this morning around our favorite topics, issues. So maybe we'll start with Camille Bussy online. Camille is Director Digital Advisory within Microsoft France, based in Paris. Pierre Rousseau, BNP Paribas, a long experienced banker with strong current focus on delivering impact and preserving capital naturel. But please feel free to complete later.
Very good, very good.
Okay. James Delton is not with us, but he will maybe join us later. He's a bit late. Matthew McLucky online with us from Posaidon Capital. A firm focused asset management focused on natural capital. Chris Dickinson, senior expert from GCF. So welcome, welcome to all. We titled this discussion this morning "The Genesis of the Green Swan," as a reference to the very inspiring book of John Elkington. I'm sure you heard about it, that calls for radically better times to live, systemic solutions to global challenges. Reference as well to the central bank report that highlighted dependencies to natural capital. Of course, we are here all qualified long-term optimists, and we know how complex it is to innovate when it comes to talking about strong sustainability and transparent implementation. Maybe a first question to launch the discussion and share views, whether we are a tech company like Microsoft, managing data, algorithms, a bank that work in creating new assets, new asset classes, or an international organization like GCF, de-risking initiatives and working on sometimes natural-based solutions, for example, or how in practice, maybe a first question, how in practice your organization or your client partners take immediate action in their daily business to search for the green swan, to find this genetic code of the story that we are going to scale and the strong sustainability. So maybe I can give the floor first to my friend Pierre. Pierre, if you want to.
Yeah, so I will give you the perspective of a commercial bank and or a financial group, as BNP Paribas is also carrying all their activities. First of all, just to set the scene, there are different aspects where a bank or a financial institution will look at the greening or the integration of nature and climate change. And as well, I want to insist also inequalities or social aspect, which is quite important to relate to. And we need to link the three. First of all, it's about setting up policies. If you don't have a vision and you don't know what to do, not to do, you need to set up policies. So setting up policies is very important, and we need, in the public sector, we will call it probably also theory of change. Maybe we'll talk about it, but we need to define. We need to define what to do, and we need to tell our people what to do first, because operators and your organization need to be clear about that. The second thing is about measuring risk. So. In all my career in finance, I start with very limited risk, which was the financial risk, and then we had reputational, and then we had climate, and now we have nature, and the nature now will be probably divided in many different type of risk. So we need to be able to assess that, and data is important. We have Microsoft here. I'm sure we talk about the importance of data that we need to collect and to be able. And the third part, the third aspect, is about also engaging in action with our clients, because we have clients, investors, and corporates, and retail clients. So we need to engage with them. Conventional finance has started to. At the beginning, we integrated that with the ESG to the conventional finance. Do green bond, blue bonds, green loans, and then we go to sustainable, and then we had the green fund and the blue fund, etc. And sometimes in finance, we believe we innovate by just changing the name from blue to green and social, etc. But in fact, it's all the same. And we are still on a conventional finance. What we will have to take is that in a disruptive way. And if we have to finance degraded land, if we have to finance the rehabilitation of a lake, if we have to finance the conservation of something, if we have to increase capture, because it's about what? Impact measurement. So if we have to create an impact, and we will talk about impact, I'm sure it's an important world, because we will allocate money for a risk return and an impact, so, and not necessarily to be green. So it means that we will have to disrupt finance. And disrupting finance, a first level is probably to create blended finance, and I think we will talk about it probably. The second one is measuring impact, but it's also maybe going a little bit further and integrating in finance the externalities. And the externalities here, what we talk about is valuation and monetization, and I would like to differentiate the two. We can value, and then after we can monetize. We don't need necessarily to monetize everything we value. That's another question that we need probably to assess, and it's a very important point. But we need to bring this. And then it means that we will create new mechanisms in order to finance the transition, because what we have to finance is the transition. And then there is a lot of mechanisms in finance. If you have to do the transition, for instance, of a degraded land, and you need 7 years, today of plantation in order to come back to a forest, for instance, the 7 years are taken as a cost today. Why is it not taken as an asset that we amortize?
Yeah.
And then it will be a completely different way. When we regenerate the same land, why we not use the credit carbon as a collateral? Because we will regenerate credit carbon. But today, we cannot do that. We are regulated. We have all different regulations. The public, the private sector, and the philanthropic world have rules to follow in order to comply. And if today we need to put all this together, the big problem that we do have is that, first of all, it's sometimes impossible because regulations are contradictory. Secondly, the cost of transaction is extremely expensive, so it doesn't promote scale. So we need to come out and we need to start to think about how can we reinvent finance. We still have a part of the transition that will be financed by the conventional and the classic model. So when the transition is feasible through the balance sheet, it works. Through the capital markets, it works. But when it's not, we have to realize that for the transition, it's not even for everybody and for everything.
Thank you.
So I don't know if this can set the scene at the beginning.
It sketches clearly the picture. And welcome, James. James from IUCN. Welcome. Maybe a question for Chris and GCF. How does GCF work with the architecture of PDBs and DFIs? And maybe you can just tell us how GCF pushes the boundaries of innovation.
Okay, thank you. Okay, so first of all, I like the title of this seminar about the genesis of the Green Swan. I haven't read the book yet, but I will look and try and find it. I thought it was a play on the golden goose. And when I was in Vietnam, working the government there used to always say forests and ecosystems are like chickens because they produce many different eggs. The eggs of timber, the eggs of flood protection, the eggs of honey, etc. So I thought it was a play on that. But if we look at, for example, studies that were released last year, 49% of the world's GDP is moderately dependent or dependent on nature. Coral reefs are providing billions of services to the economy. And forests, wetlands, mangroves, the ultimate contribution to the world's economy is in billions. But as Pierre says, maybe that's the value, but it's not monetized. So this is the big challenge that we really need to think of, and we call on GCF entities to try to come up with innovative solutions that include bonds or maybe the policy regulations in countries that try to monetize these services. Because one would think with such enormous values and capital value that companies will invest in them, governments will invest in them, but unfortunately it needs maybe some more pushing from the public side as well as the private sector side. In terms of the Green Climate Fund, we're the world's largest climate fund. We're regarded as capital agnostic, so we have grants, loans, equity, all sorts of different capital and financial instruments that we can use. We work with different entities depending on the accreditation status, but we try to encourage innovation and financial sustainability in all of the projects, which are like beyond the traditional grant-based development programs that traditionally have been done by many donors. We're now trying to encourage sustainability and mechanisms in all the projects. We had some very innovative ones approved at the last board. So, for example, involving blended finance. There was one with the Interdevelopment Bank in the Amazon, which is funding communities and community enterprises to be able to invest in ways of incentivizing and getting economic benefits from managing forests through non-timber forest products, through coffee or cocoa under the canopy, or through ecotourism. There's also the Coral Reef Fund with Pegasus Capital that was approved at the last board, which is looking at equity. And it's also linked in a way, that one, to the public policy side of the Coral Reef project, which is under a different funding window, funded outside of GCF, but that provides a lot of the technical capacity and public policy enabling environment, which will help with the equity investment. So that's quite a good combination there. We also work with a lot with public banks, trying to provide concessional finance so they can provide this to pass down to farmers and smallholders. Like at the last board, there was one in Niger with the West African Development Bank, BOAD, who were one of the sponsors of this group. So that means that they can invest in sustainable water irrigation and a regeneration of land, agroforestry, etc. But I think there's a number of other instruments we need to look at. So we need to work with partners like BNP, looking at bonds for capitalizing and monetizing ecosystems, like, for example, peatlands, which is, I know, an interest of my IUCN colleague here. And also, I think, working with public policy and governments to also look at things like debt swaps. A lot of countries are under financial pressure because of COVID. A lot of countries, these countries are already under financial pressure because of their economic status. Is there an innovative way that we can work together to try to offset debt, but not just offset it, but make sure there's some actual positive action through climate change action, or designating protected areas, or making positive action for ecosystems. But I think there's a lot of things that need to be done. We're also working with insurance, agricultural insurance, and also ecosystem insurance in Mexico with coral reefs. But there's still a lot to be done. But we also must remember that all the work we're doing is ultimately has to benefit the poor people of the countries who are really affected by the impact of climate change. Okay.
Thank you, Chris. The word was said, we talked about blended finance. Maybe shall we give the floor to Matthew McLuckie online to maybe tell us what Posaidon Capital does, and maybe have a view on why blended finance is so difficult, why it doesn't work, why. So it will be great to have your thoughts, Matthew. Do you hear as well?
Yeah, I can. Thank you, Kamal, and apologies not to be there in person. And I'm actually dialing in from a car because I got stuck in traffic on my way to Glasgow. But
I can see that. Okay.
Yeah, apologies.
Okay.
Yeah, I mean, I think so firstly, Posaidon. So we we're an asset manager, and we also have a capital markets advisory group. And all we do is we design financial instruments that support the conservation of natural capital across terrestrial and marine ecosystems. And that's everything from, we've got a blue economy efficiency public equity fund that we're launching with a major global asset manager. We're advising governments and subnational governments on green bond issuances. And then we also sort of working on a few private funds and then also private placements. So we're currently in the process of a secondary equity placement for one of Africa's largest REDD+ carbon developers. And there's a lot of lessons that can be brought out of that process. But I think the one of the challenges comes is that fundamentally Pierre summarized it well. He used a few key words such as amortization. And when we start structuring these instruments, it's how we interpret value is really sort of at the core of the thought process and in the upfront sort of, I guess, design and what we're going to target. And I mean, if we think about nature and nature-based recovery, and if we want to use underlying indicators and the volatility of nature-based change to actually start assessing value, and I'll come back onto that in a minute, we're typically looking at longer duration investments. And so hence there's been probably more of a proliferation of green bond markets over, say, for example, green equity-based finance. And I think that the challenge comes then is around risk pricing. It's around actually looking at how you're going to deploy capital over long term and then fundamentally setting KPIs and milestones that then can create a concessional adjustment on capital, which is what a lot of blended finance instruments are looking for. And in my mind, too often blended finance it's trying to merge the incorrect sort of initial structure of different finance forms. So it could be concessional debt mixed with a long-term outlook, trying to provide gearing to short-term equity investors, and the two objectives don't necessarily meet. And so I think in our mind, you do need a blended finance approach, but all of the finance needs to be layered in the same sort of ultimate objective and timeline. And in our mind, that has to be long duration. We need to be looking at 20-year, 30-year plus instruments with a heavy holiday period at the start of the financial cycle. And I think one of the key parts that we're seeing with our clients, and I mean, our clients are normally banks, asset managers, larger family offices, and subnational governments. We're seeing that accessing funding is not the issue. Accessing funding in a sensible period of time is a challenge. And we all talked about the green COVID recovery. Well, COVID is now sort of thankfully coming to an end in many places, and there's been no finance deployed to support some of these landscapes and communities that were most vulnerable to the COVID pandemic because we were simply too slow. So I think the key part is we need to speed up. We need to create an environment that enables actors on the ground to actually build capacity to a point where they can manage this finance sensibly in landscapes, particularly in emerging markets. You can't just drop $1 billion on the ground because it distorts so many local factors and it creates hyper-local inflation, etc. And fundamentally, we've got to get that government link right, as Pierre sort of correctly said as well. So I think it is complex, but I think the key part or the message that I would say is it's making sure that all of the different layers of blended finance have the same outcome target, the same outcome sort of term and how long the finance is put to work for, and that fundamentally it's suited to not create a distortion locally on the ground. And Kamal, maybe later on we can start talking about some of the landscape finance projects that we're working on with AFD.
Many thanks, Matthew. Very interesting and clear. And maybe I would give the floor to Camille. We talked about transparent implementation, and we know how data is a component, a critical component of the equation. how data could enable impact measurement and support decision to protect nature, natural capital. Camille, I know this is an issue that is one of your favorites, and especially through this initiative you already shared with us, the planetary computer that is led by Microsoft. I give you the floor.
Thank you. Yes, maybe just before talking more in detail about data, I'll just highlight what you all said before, is that first, if we want to, we need to measure. We need to be able to measure our impact on nature if you want to preserve it and protect it. But measurement means also that we need to know, to know nature and to understand nature and the direction and intensity of all our activities on nature. So this means also a common language, a common referential, and to put the same meaning behind the word to be able then to measure it. So this is also a big paradigm that we use to just for ourselves and to work with our ecosystem and environment, but also which is very important when we are going to talk about data. Know the nature means that we need really to have the information, and have the information means us to be able to collect the data. Data collection is really one of the main challenge that we all have, not just because of capacity or technology, because the technologies, we have already some of them, IoT, sensors, connectors, a lot of databases that have been built by researchers, by universities, by a lot of people around the world. The most challenge that we have is more to classify it, to give it a meaning, and to put it in a referential or a common language or standards. And on this, it's really what Microsoft is really quite hardly pushing on, is how can we work in ecosystem? How can we work all together collectively to set up and to try to agree on some standard that will be, and that will enable everyone then to be able to use at least this first data that we have and to share it completely openly. So what we are working on is both data collection, open data sharing, and then how we can empower all the economic agents, whatever governments, private companies, and so on, to be able to modelize and to aggregate and manage then this data for their own purpose. And you explained before how a commercial bank may use this kind of data, how private funds, asset managers in this financial world, how they will need to be able to use this data. So we think that our mission, and it's really part of our commission, is to provide and to build these technological capabilities for everyone to be able to understand their impact and act on it. So planetary computer is a first initiative of quite a new type of computing platform that enables to aggregate environmental data from all around the world, and that is contributed by a lot of universities, companies, private and public actors. And then that is openly shared through both the raw data, but also applications and API and a lot of digital capabilities on it, so that it's easier to consume by everyone. The second thing that we are developing right now and putting on the market is what we call the cloud for sustainability, which is quite a wide word, but it's really a tool that we are building to automate and to be able to do some carbon accounting. So for now, it's on carbon emissions, but it will spend on more nature, waste, water, other challenges that we all have. And the idea of this new tool is really to help everyone to manage the data, because it's really a biggest pain point. We have a tons of data, but we really need help to manage it, classify it, be able to record and to report. So, and this links also to a point that has been already discussed, and maybe we will come back on it because I think it's very important, is how we can do, at least for climate change and carbon emissions goals, how can we build this carbon accounting that can be shared and based on common standards for them to be able to reduce it globally.
Thank you, Camille. Maybe a question to IUCN, James. How IUCN actually tackle the challenge of strong sustainability and scaling as well, and maybe as well to have a flavor of. We feel that nature-based solution is the future of everything. So tell us more.
It's nice to think it might be the future of everything. I think it's probably been. I think it's. You know, human beings have relied upon nature-based solutions to build our societies. So I think by reframing nature as part of the solution in a more modern economical context going forward, it allows nature to be understood much more as part of the conversation and therefore a seat at the table in terms of what it requires to be invested in because of the benefits it gives back to us. A little bit like what Chris was saying earlier on about, you know, that it provides these numerous services back to society. You know, our interests are around sustainable land management, agroforestry, restoration, watershed management, peatlands, wetlands, coral reefs, the natural system all around us. But along with that is not only the investment required to ensure those systems are, one, protected where they need protection, so that requires a certain type of finance, but also the finance required to shift degraded lands into restored lands, which takes time, as we know. And it's interesting that the point made earlier on about the long holiday period at the beginning is that it takes time to show a result. You know, you can break a bottle of champagne on the bow of a new ship, but you can't easily do that to a restored landscape. You're waiting to see the change, which means it becomes very politically difficult for decision makers to see a change that hasn't occurred yet. But there's still something to champion there. So I think getting that understanding of the services and the returns from those ecosystems is critical. And then it goes back to the point at the beginning about valuation is one thing, but it's the monetization of that which takes the time and the understanding of the decision-making level that's required. You know, we are a GEF and a GCF agency, and so our ability to access finance and mobilize that for countries is really, really important, because without that ability, we can't get to scale, and the countries can't get to scale. I mean, the simplest, I'm a freshwater guy, so the simplest thing that I'm just always baffled with is that most of the world's freshwater ecosystems are polluted. Some continents have hardly any wastewater or industrial treatment systems for pollution. And yet, this is some of the hardest investment to put on the table, because actually you can design systems off the shelf for 20, 30 million. You can make them happen fairly quickly, but you can't even raise that capital at the national level. Countries just don't see that possibility because it needs a payment structure and the consumers and a willingness to pay. That can all be solved, but it's still very difficult to access that finance because it's not large enough, but you could make it large enough if there was that level of will. And the impacts of cleaning up freshwater systems is huge. It's huge for freshwater biodiversity, which has had the greatest decline. It's huge because of the benefits on fish stocks, which people require to eat. It's critically important because of the impact that has on the coastal ecosystems. You know, many coastal ecosystems are reliant upon sediment and freshwater flows coming into the coast. But it's also critical because the cleaner the water, the less energy, therefore the less carbon required to treat it. and the ability, therefore, of cleaner freshwater systems for human consumption. So I think these things are not difficult. It's just there is a set of stages which don't necessarily align very well. And it's always been quite baffling to me as to some of those fairly simple investments could be done, but they don't fall very easily within any form of direct investment. So I think our interest is predominantly about accessing the finance, but also about looking at that from a results-based perspective. I think quite often we talk about accessing the finance as the end point, because then we've got, we can actually make that happen. But from our side, as a conservation organization, the end point is really getting that result for the natural system. And that's a 5, 10, 20-year horizon, which matches some of that more long-term financing. So the nature-based solutions standard that we developed is really designed to help guide project and program development, guide, therefore, how the investment can be used within that framework, and ultimately look to value and monetize that result at the end of the day, so that you know that that's going to materialize and you can get that on your balance sheet. And you can also demonstrate that to your partners. So I think we have a program called the Subnational Climate Fund, which is financed by GCF, which aims to leverage private capital into sub-regional climate investments and applying nature-based solutions within that portfolio. And so it takes time to develop these schemes, but there are mechanisms out there that can make it work. But I think one thing around blended finance is you also need to look at the blended partnership around it. The solutions don't necessarily exist within the traditional set of institutions. So you have to start looking at mobilizing others in that who have the solutions, who think quite differently, who don't need the higher commercial returns, but are willing to take a hit on that almost to put that money into an investment that they hope will bring the return for nature and for their balance sheet over the long term. And I think, one of the things that has always sort of slightly irked a little bit is that it's obvious how we use nature-based solutions because our economies are based upon them, our cities, for example. Yet getting that investment to flow out of municipal areas back into those areas where they source their water resources from, where the food is sourced from, is actually really, really challenging. And I think there has to be some way of moving that type of municipal finance into those rural areas in a way that's easier than it is today, and also just raises the attention because that's where the consumers are actually demanding change as well. Not in all countries, but that's where there is a possibility. Anyway, I'll stop there. Thank you very much.
Thank you, James. It's very interesting, and it raises a lot of other questions. Maybe we could maybe for each of us, we all have maybe a Green Swan story in our mind somewhere, or maybe ugly duckling, but something we can we can incubate to become a radical innovation. I know, Pierre, you worked on reefs, on a reef, a fund dedicated to reefs. Maybe you can tell us a little bit about your experience and how you.
Yes, that's a good example we can start with. It's been mentioned by Chris a few minutes ago. It's a combination of different actors. So first of all, we have to. The first complexity that we face is that we need to align all the vision between the different actors, because you have a foundation, who have a vision, then you have the United Nations, who have its operating momentum, then you have the de-risker, the Green Climate Fund, which has also its process and its methodology, because we are managing here public money and philanthropic money. So there is definitely one side. And then after that, you have to connect. You have to connect the private sector. And the overall idea is to say, how can we, through a grant window, incubate projects which are not bankable or investable, and make them investable around a thematic which is the resilience of coral, because we want to make sure that we do preserve an identified number of country and region, and then after that. We have to create different instruments which are on the investable side. And on the investable side, and this is what Matthew has mentioned quickly, the immediate I would say things we do is private equity. And private equity is one thing, okay? So we work, so immediately we put in place the private equity things, and we will see a certain number of projects that will be conducted there. But then we discovered that it's much more complex than that. First of all, number one, we discovered that a project which is a small project, can you imagine we are in project in Fiji, in islands, where it's very small cap type of things. And we need to bring it to a level of finance where we are most often in the wholesale finance, that we need transition products. So there we start to work with the UNCDF to create a kind of bridge of financing. But we discovered that the bridge of financing is very expensive also. So now we are thinking to coming with another type of innovation, which are the impact bonds. So because some of the project cannot be immediately linked to a private equity. So now we will start to build up impact bonds, which will involve, again, some public money and some private investor, which will allow us to bring off-takers. Because in the principle, the people who will buy back the bonds at the end will be the off-takers.
I see.
So the fisherman from the fish or for the different product done. So there we discover suddenly, this was not planned at the beginning, I can tell you, it was not part of the plan. Then after that, we discovered that in Coral Reef Fund, finally, in the emerging markets especially, it's more a debt business than a private equity business. So a private equity can cover a certain number of things, but a lot of things will come from debt, and debt is cheaper also than private equity. So what kind of debt? But you have to build infrastructure, waste, decarbonization, because if you want to preserve everything, it's good to have project, but you need to make sure also that the environment is also clean around it. So then we call project finance. Project finance is a banking business, so then we need to think about that. Then after we have the offtake. So the off-taker, so we can put off-taker type of mechanism where people can buy the goods that has been produced around that. And then we have microfinance. So we do believe that refinancing microfinance is probably a mechanism, because linking the small, I will use a word which is not maybe appropriate, the small finance with the big finance, it's something that we need also to create as another mechanism. So de-risking is good, but we have also refinancing system if we want to big. And all this why, this is what has been mentioned by James before, is that there are some gap to finance. If we are in emerging market, projects are between 5 to 75 million. 5 million is too small, is too big for philanthropy, and 75 million is too small for banks. So we need to create those mechanisms together. But what is at the end the cost of all those mechanisms? Is very expensive. The process is very long. It takes time.
Yeah.
So and you know, time is money also.
Yeah.
So especially industry. So we need now to find mechanisms where we can, if we want to scale that, if we want to multiply this kind of experience. I do believe that what we do today is already the big success that we have done is to put people with a different vision together. Projects initiated by foundation, which are implemented by public and private sector with a different mechanism of de-risking, is already a big step. But we need to go even further now. We need to simplify the mechanism. We need to make them less costly. We need to make them probably more transparent. But we need also to link all those together, because today the world of finance is fragmented and silo. And there is one thing I want to end up, which is the most important, and I wanted to keep for the end. We need to bring the private investor at the beginning of those projects and not at the end, because they are coming with an additional layer of complexity, which is about liquidity, which is about their own regulation, which is also about their own internal policy and mandate. And suddenly we discover that we have built a fantastic product, but it doesn't match, it doesn't match either the regulatory requirement, or in the other side also the internal mandates that those people have. Keep in mind that we have two big things that we need to keep in mind in the reality of investment, is that majority of the the asset owners are using asset managers, means other intermediaries, in order to manage the money. So that means it's an additional layer which is complex, and that 70% of the money is managed passively. So it means that we need to rebring active management, because this is about active management.
It's an excellent transition to this issue. I mean, blended finance is not an industry. It's hard to see how will emerge mainstreaming in the blended finance. So it will be great to have maybe Chris or Matthew, your view as you have in your mandate the risking component, or Matthew on the asset management industry side. How do you see that? Is the blended finance going mainstream or no? Is going industrial or no? What is your perception? Yeah.
I mean, maybe just to start. I mean,
yeah.
It was quite interesting when the very positive announcement came out earlier in the week on the government commitments to address deforestation. So we're in the process of working with a major foundation to design a deforestation equity index, and it goes back to Pierre's point. It's a passive based product that will eventually result in ETFs, actively managed certificates, being able to be designed off there. But I went on to Bloomberg, and I also went on to Icon and typed in deforestation, and there is no such product in the market, despite all of these commitments. So yeah, I think we always think about how can you build products that have an ISIN, and then become conservation-focused products with an ISIN that you can attract asset managers. And I think, Kamal, maybe just to answer one of your previous question, which picks up on a lot of what Pierre was saying. When you look at traditional conservation finance industries, so on the ground, so if we're thinking about forestry, we're thinking about agriculture, livestock, tourism, fisheries, aquaculture. These businesses are very, very bad. In fact, there are almost zero examples where they generate an expected private equity-based rate of return, especially relative to benchmarks in emerging markets. But that's what the upfront financing requirement is of these industries. What they are very good at is generating long-term income, which can be structured and packaged into an annuity, which becomes attractive for someone like a pension fund. But the pension fund can't invest in the upfront equity, but they would invest in the long-term annuity. And so we're in the process of, we thought about all of these challenges, and I can't see the audience, and some members may cringe when I say this, but we're designing a special purpose acquisition company purely for conservation. And many of you may be familiar with the SPAC model, but in essence, what we do, it's a very quick, it's a very aggressive product, but within you raise an equity pool, and there's a blind equity pool, and we use that to go and transact a series of investments at a landscape level. And we use a lot of spatial data, we use a lot of spatial planning, digital twin planning, to understand what interventions we should be investing in to create a landscape level impact across business, community, biodiversity. So we make a series of strategic investments, we aggregate them into a single special purpose vehicle, and we use upfront equity to do that, and it's a very short time period that we have to execute. And then we reverse that vehicle onto a stock exchange. And what happens is your upfront private equity investors, they get their exit or liquidity event within 2 to 3 years of their investment, because at that point, the portfolio is generating an income which is attractive for pension funds and the annuity investors. So you convert the risk and you convert the financial structure whilst creating an exit event. And that's something which we're doing. And one of the key things and the most innovative components of this is we've really, really thought hard about land, and we've thought hard about communities, and particularly indigenous communities. The vehicle itself is dual listed, so the head listing is in Europe, but it has an in-country local listing on the domestic stock exchange. The domestic vehicle is there it's structured as a conservation real estate investment trust, and it's there purely for the shareholders of the communities of the landscapes in which we're working. And the trust is owned by the topco, meaning those communities benefit from not only the upfront equity liquidity event, they also generate a dividend stream into perpetuity so long as they remain shareholders in the vehicle. And we just think this is creating a new structure, which is bringing a new type of investor into the market for landscape level conservation finance. Maybe I'll leave it at that. There's one other interesting product, but we can come on to that later, maybe.
Thank you, Matthew. Maybe Chris, you want to
Okay.
react?
Yeah, that sounds a really good example of innovative model. I think one of the problems with investing in nature-based solutions, ecosystems, is, as Pierre mentioned, the size, the scale. Equity is only one part of the equation. We still do need to have public grants. We need to have microfinance. We need to have, for example, the projects that we're working with the local national banks to give loans to smallholders. There's what's often known as the missing middle. Sometimes easy to access $50, $100 for a farmer. It's maybe easy to access 50 million for an impact investment company, but the bits in between 5 million and $50,000 is quite complicated. And this is where GCF hopefully can come work with entities to develop for both the larger capital, but also the missing middle farmers and small enterprises. Because as Pierre mentioned, in Pacific small island states, the population is very low. There's one of the priorities for climate change. Obviously, very vulnerable people. Small number of people, they depend upon imported goods often. The potential for a large-scale investor to invest in a business there is very difficult because of all transaction costs. So we are trying to work with different innovative mechanisms. We have one with UNDCF actually in the Pacific, trying to look at smaller investments for community and other business enterprises. But we must not lose the sight of poor farmers and focus on companies and equity all the time. We have to have a multitude of different mechanisms, which is one of the good things about GCF, because we are able to do grants, loans, equity, etc. So we can cover all the different aspects of finance and needs of communities, etc. Yeah, thank you.
Thank you, Chris. Maybe, James, you want to share with us a Green Swan story you have in mind?
Well, I can give you a story of something that we're developing right now, actually, and that is looking at, and there's nothing massively innovative about it, but the key thing is, I think, is it fulfills our role as IUCN well, is to look at decentralized climate finance in East Africa, where countries have got the ability to access climate finance, but they're struggling to do so. And that there is a gap of a pipeline of project and possible investments that are available, but there is also that huge urgency and need for improved, reformed agricultural practices, climate-smart agriculture, and improvements in soil carbon and reforestation. So we're trying to work using a fairly small-scale finance from bilaterals to align activities with the NDCs of the countries and to ensure that we then capitalize on the community-driven initiatives into appropriately sized grant packages that allow those communities and activities and partners to develop a pipeline, basically, a pipeline of programs. Not hundreds, not even in the 20s, but we're talking about looking at district-level initiatives that are able to demonstrate what could be done with a larger amount of finance, bring national banks into that conversation, and look how that can leverage international climate finance as well. There's nothing hugely innovative about that. The challenge is being able to actually not scour the, if you like, market at the district level for a myriad of different projects, which are all going to be heavily reliant on grant finance, and that will therefore mean that they're not generally going to be so sustainable. But to look at those where you've got one that's actually almost from a competitive perspective going to be the one that's going to really make it, and use that as an example to reframe the conversation at the district level with other interested parties who want to look at accessing that climate finance. And I think from our side, that's important for us because it allows us to fulfill our role from our country offices, being able to provide that technical assistance, but it also means that we're fulfilling the role of working with our state members to allow them to both decentralized finance, access that at the local level, build a pipeline that they can decide what they do with going forward, and also allow us to put initiatives together that are of interest to the likes of GCF and others.
Thank you, James. Camille, you raised later the issue of taxonomy, and I know that Microsoft is involved in a huge process of work, a group of work with players in the landscape of food industry. I was wondering on nature, on the nature side, do you see that kind of global initiative to try to set up a taxonomy that allows everybody to understand each other?
More and more, I would say, because more and more, and particularly in Europe, because it's really particularly led by Europe, you have this tentative to have a referential and to put some indicators and criteria, and for this criteria to say also quite explicitly which kind of data and information that needs. But it's also a question I had for this group, and I would be very interested to have quite a discussion on that, is that beyond the origination, the financial structuration of the investment, and how, yes, globally, we can ensure that the money arrives to the right people, and both the poor farmers, but also through more sophisticated financial vehicles. It's beyond that, and to support this development at scale, don't you think that we need also some common indicators, some risk models, and which kind of data do you want to use, like geospatial data, data on the forest, how to tackle historical data? How do you ensure it's shared, transparent, auditable? How are you building this kind of indicators to demonstrate the value to the various parties, engage them to put more money and liquidity in that, and to ensure that the financing and the investments that are done do really have an impact concretely on nature?
In your reaction?
Because it's really some topics that is something and we are really working on, because it's very complex, but I would be really interested by how you tackle this challenge.
James? But I suppose the challenge of where, if I can ask a question back, where exactly are you concerned about the impact on nature?
Yeah, the question is more how you ensure that the investment and how you measure the impact on nature of all the financial vehicles, origination, structuring that you are all doing. How do you use that? Because without data, without a shared data on that, geospatial or forest or landscape, I think it's quite hard to measure the real impact on it.
Yeah, I think it's a really good question. I think I don't know enough about how you would measure that from a financial perspective, but I think from our side, from a nature-based solutions perspective, you know, I never really like to sort of, you know, champion things too much, but you know, our nature-based solutions standard is there to try and help guide how you would design things that would minimize negative impacts and maximize the benefits. So, and it's guided around, you know, a framework that allows you to ensure that. The challenge is that with finance, you're often asked to monitor projects as well. I mean, not just finance, but projects. You're often asked to monitor the outcomes against what you're expected to achieve within a particular timeline. And the difficulty is that actually by investing in nature-based solutions, you're accruing value over time, but you often cannot really value that particularly well until the end of a project. So I think there has to be a way of being able to set in place trajectories for monitoring the impact of that finance on nature. The other thing is that I think actually we don't do that well enough. I don't think we actually properly understand the implications of those investments on natural systems and the impact on that on social and environmental health more broadly adequately. And I think that's because we're often limited by the amount of finance that you can use within project finance for that. But I think at the same time, there needs to be a better framework where institutions can share that knowledge and align it in a way that demonstrates the value of that investment to nature far more broadly than institution by institution or program by program or fund by fund. I think there has to be something that's far broader than that. Thank you.
Thank you, James. Maybe a word around, and maybe Pierre, you can share with us your experience about the enabling environment, because when we start talking about this blended financing and the complexity, we need to have a lot of items here, ingredients here that works together, together. So, could you tell us a little bit more about what you perceive in your landscape of action?
To understand well, your question is what is needed to make it happen, or this?
Yeah.
Yeah. Okay. So first of all, if you have to start with the definition, a clear definition of what you want to achieve, not only in terms financially, so in terms of finance, but also in terms of condition of sustainability that will be related to that. And for me today, it's the nature-based solution model that has been defined. It's climate, it's nature, and it's people. And you cannot avoid to cover the three. You may have an entry point which is more on nature, more on climate, or more on people, but at the end you have to cover. And the nature-based solution model developed or concept developed by IUCN is definitely a base that we are all not taking as a model and as a starting point. After you have to align your people. Number one, you have to find your people first. Who will you do it with? With your partner. So, and the partnering is not necessarily easy because it's very fragmented. You need to bring. Sometimes it's involved corporate, multi-development banks, and more we have a trend now. First, us in banking, to have two sources of origination of deal, because it's not us bankers who decide what we want to do. It's coming either from development banks and DFIs, because they have projects, they have been kind of channeling by that. And I will add, with or directly with the foundation or through with the foundation or a foundation, the non-profit public sector, and the corporate. And the corporate, most of the time, when it's coming from the corporate, they're already working with non-profit organizations in many cases. So this is this kind of couple that will bring the origination, I will say. And then after that, when you have the origination, what we forgot about is to create a governance. We need to create a governance, and we need to create a way to operate. So you need to have a PMO. So either somebody play the role of PMO. If you don't, if nobody wants to play that role, you need to appoint. And this is where we can go and pick up specialized company who are the ability to play that PMO. Some people sometimes they don't want to do it because they do find it expensive. But this is the kind of cost you have to bring, is an investment you have to bring at the beginning. Because after that you will go to do a concept note, to understand exactly what you want to do, to write it sometimes make you change, and making sure that everybody agree. Then sometimes we have to go to a pilot. We have to piloting what we do. And because we will realize that by doing the pilot that we forget half of the criteria that we have to take into account. So it's really a process that you have to work with others. It's collaborative process. It's a collaborative process. It's something which in finance we don't have sometimes the time. In finance we used to push product. Here we need to build solution. So it's a different mindset for our people. It's a different concept. It's also something when we have to use data. We forget sometimes to use data, and I do agree that what Camille say, we need data, we need to define data, we need to bring that at the beginning, and we need to collect. We need also to think, and this is something for me very important, is that we need to think forward. In finance, we are used to think backwards because we base all our decision of credit on the past. But here, on those projects which are moving forward, we need to think and this is what TCFD is doing and TNFD is doing, is to define scenario, and based on scenario you need to build. So this kind of project, you will build it not for what we have been or what we have done, but what we will do. And so this means for finance people is to work with the other side of our brain because we used to use the one which is looking backwards. And that we have to change the concept. Then we have to change our concept of risk, because we have new type of risk. But we have also to work with full transparency, because if you work with partners and you're not transparent, your partnership will never work. So this is, if you realize what I said today about the collaboration, solution, thinking forward, scenarios, transparency, data, this is far away from the conventional finance system because this is not the way. So we need really to reinvent a way to do finance that will be adapted at the disruption that is happening around the world.
Thank you, Pierre. It's very clear, and it's the perfect transition to ask maybe GCF and IUCN about do you have a space where an incubator or that kind of space where you can actually be in the chemistry of ideas and try then to implement action, pilot, prototypes, take that kind of risk on your balance sheet. And we know when we are a bank, risk is something that it's like oil and water. It doesn't mix. So, so how do you tackle that?
Okay. Well, first of all, I'd just like to make a couple of comments related to the two previous speakers. So, credit equity. You imagine a farmer in Africa with no bank accounts, can't read. This is also something that needs to be done, financial equity for farmers as well. And in the Global Food Summit that was a few months ago, it was raised as one of the key limitations for farmers, yeah? They don't have this fiscal equity, they don't have a history of credit. And this is also something which funds like GCF can also help support through some of the projects. They need the credit line, the history of managing money before they can access small finance. We do that with some of the small projects and some of the institutions. In terms of metrics of biodiversity and conservation, performance, I've seen many discussions on this. I've seen many unrealistic propositions proposed about asking companies to measure and monitor biodiversity related to investments. We need to be simple. We need to follow large-scale indicators. We need to use risk management frameworks. You can identify in a landscape, for example, the gentleman from Posaidon's looking at landscape investments. You can identify in there the high conservation values. You can come up with a landscape plan. I think these are the sort of things that we should be looking at. But I have seen many proposals for corporates to measure biodiversity along the whole of the value chain. You imagine this doing this for a company like Unilever with thousands of investments. We need to be realistic. You can look at perhaps the impact on forest cover as a simple proxy. That's starting somewhere, I think, that's sensible and practical. In terms of risk and investments, this is the whole point of GCF, is that we can take risk. We can help the Pegasus Coral Reef Fund because our investment, if it fails, we can accept risk. The other investments, the IDB one, we can accept the risk. So this is one of the whole aims of GCF, is that our junior capital can help other senior investors to capitalize the equity investments. We also have a mandate to be innovative and transformative using technology. So yeah, we can incorporate this into projects whether it's Internet of Things for rice cultivation, which was one of the inclusions in one of the last board's projects in Thailand. So we can start to pilot these things. And a lot of technology also fails because it can't cross the valley of death. So we've got another project with the Korean Development Bank, working in 4 Southeast Asian countries to try to help take some of the technology and entrepreneurs across this valley of death and handhold them and try and make the enterprises successful. So yeah, we are risky. Yeah.
Thank you, Chris.
Thank you.
James, you want to share with us your view?
Well, I was just thinking because Chris actually just sparked something in my mind. A couple of years ago, I was in East Africa and I was at a cotton factory, and for 1,000 kilometers in front of that factory was cotton through various different outgrow schemes, and this particular company had some very robust corporate policies over exactly what they should be doing. And they'd graded them in a sort of, silver, bronze, gold, platinum sort of level standard for their sites. And the difficulty was that whilst this was very good stuff and had great consultation to design those sort of frameworks, applying them out to a site in East Africa where the local KPIs of performance for the staff and the actual company were driven by production was a huge missed opportunity, because in front of you what you could see was effectively monoculture cotton, but interspersed with some natural parts of the landscape. But the opportunity for restoration of the landscape, the opportunity for agroforestry, the opportunity for improved water stewardship and improved water management was tenfold in front of you. And the eagerness of the farming communities, and in particular all the way down to sort of local women's groups who are actively involved in harvesting the cotton, was huge, because it was an investment opportunity sitting there right in front of us. It's just that wasn't seen. It was, the company didn't see that opportunity. It didn't see the possibility, even though from a sort of headquarters level, there was a demand for that from its own landscape initiative. So I think that connecting the dots is key, and making sure that the partners, and it comes back to, I think, the point Pierre said, transparency in terms of what's going on, but also transparency in terms of how solutions can be created and identified, rather than pushing product, creating an opportunity for the company here, and creating an opportunity for those farmers who could certainly have done far more for the landscape and reap the rewards from that, both financially and from a production perspective. So I think to me these opportunities are tenfold. It's just that they're not seen in the right framing. They're not seen as an opportunity, where we're still looking at them as either a pure commercial extractive process or something that requires grant finance. And the ability to blend that with other things is just not yet at the scale it needs to be. And I think we'll get there. I don't want to sound too negative about that, and there are some great innovative things going on. It's just we need to see more of that, and we need to be able to move to that innovation space quicker than we are doing at the moment.
Thank you, James. I was wondering, Pierre, if BNP Paribas has an innovation lab or a space where you can actually seed some new ideas and take a risk, actually, of execution.
Yeah, we have different structure. Of course, we cannot do it with the client money, so it has to be done with proprietary money. But we have different structure. First, the foundation. Through the foundation of BNP Paribas, we have been for a long time, by the way, financing climate and financing initiative through climate. What we do now with the foundation is to rely more the foundation to work with other foundation to create more connectivity with the rest, to create a scalability at that level, and to link also more and more what we do at the level of foundation with the type of business that we can do, because we do realize, and we have given example that foundation can be a source of innovation and a source of ideas, and we have worked with a certain number of them already. The Coral Reef Fund is a good example. It starts from 2 foundation projects. So this is the first area, and to connect foundation, the world of the foundation, more with the. I would like just to remind figures that the total foundation in the world is 1.5 trillion US dollar of capacity that can be used also as a green field and as a not only for grant, but also for concessional, for different new type of things we can do. The second, so that's one area. The other area where we are also experimenting innovation is impact fund. So we have put a small impact fund. This is not an activity that we will develop us as a bank, because this is not our purpose, but is to understand impact and how we will get impact in the culture of the bank.
Yeah.
So we need to associate that. And we have created different tools. Like recently, we have created an impact fund with Solar Impulse of Bertrand Piccard. Together in order to do innovation, and we will use this as a base, and without disclosing a lot of things, we are working even more with the Green Climate Fund in order to see how we can create something for emerging market in that respect. Yeah. So this is not what will revolutionize the world, but at least is to create new tools, new way to work, and see or we can incubate that. What will be the most important is the fund by itself is important, but what will be the most important is also to create this culture of impact within organizations which are far away from that. That's probably two examples. There are many other things that we are doing, especially specialized business. Like we have a leasing car and we have a real estate business where we are doing a lot of innovation, where we are more in the economy, in the buildings and the mobility, where we are experimenting there, like we have been experimenting cars without drivers, and we have been experimenting new business model of financing in cities, mobility, etc. So there we contribute. So, but that's few examples, and there are plenty of others.
Yeah, foundations, it's the perfect structure to bear that kind of risk, and we should ask IDFC members to collectively set up a foundation so we can have our lab for bullish stories and Green Swans. Matthew, do you want to react? I know you are in touch with, as an asset manager, with a lot of foundation, but other people money. How do you perceive that risk appetite and on your side?
It's a very good question. I mean, for maybe just to give a very basic answer, we see zero risk appetite in the marketplace relative to the need. I mean, we always talk about the urgency that's required. But still, you know, when we're structuring transactions and taking them to DFIs, when we're taking them to corporate balance sheet investors, there is very, very little risk appetite to get money moved quickly, and that's the reality. And I understand it. I sympathise with it. A lot of the projects aren't investment grade. The projects, it's a bit of a round peg, square hole. They don't fit the type of funding window that the DFIs have put out. You have to have access through a GCF accredited agency to get access to funding. Yeah, it's just the process is very slow. But I think, you know, there's been enough sort of conversation on that and sort of how we can sort of get over those hurdles and bring efficiency into the system. And fundamentally, it's about scale. And again, you know, a lot of the opportunities are small community-led initiatives, and they don't meet those scale requirements. But I think fundamentally, that's where data can come in as well. And maybe picking up on the previous points around data, what I think will increase risk appetite is if we can make investments more credible and more believable and more linked and rooted in science. And to give an illustration of that, there's a lot of concern about the global carbon markets at the moment, specifically voluntary carbon, quite rightly. If we look at RED+, the advances in forest-based LiDAR technology, so using satellites to measure forest carbon sequestration rates, and this data has become very accessible and very affordable only in the past 18 months. But the fact that you can now use forest LiDAR to validate and verify and audit project design document carbon sequestration sort of schedules is a game changer for institutional investors, because suddenly you can go from an annualized issuance structure to maybe a quarterly issuance structure based off real live satellite data. So I think that's where data can be used to actually link into the direct trading of a commodity. There is a very big risk warning there, and yeah, I was at IUCN in Marseille, the latest COP15, the biodiversity COP. We're seeing some very worrying things about people trying to commoditize biodiversity and capitalize and commercialize on biodiversity. And I think there's a lot going on in the US in particular around natural asset class structures. People are trying to actually place values on individual sort of biodiversity assets. And I think outside of spatial context, biodiversity has a very different meaning and value. And so it's a dangerous route that we're going down. I think the one solution to that, but there's a risk of overcomplicating this, and we certainly wouldn't necessarily endorse this, but if you want to trade on the voluntary, as a retail investor in the EUA carbon markets, for example, you've really got two options. You either go and buy an ETF, or you go and buy a CFD, so contract for difference, which trades not on the underlying asset, but on the volatility of the asset, so the volatility of the price. But you could do the same thing over the forest carbon sequestration rate of a forest or a landscape, or the fish population within a fishery. So I think rather than trading on the asset, trade off the volatility of the indicator of the asset. But I think that risks getting a bit too complicated. But I think fundamentally that maybe my final point is on this, and again, this comes down to maybe accelerating that risk tolerance. Is let's root the planning of these structures in science over the long term, and really try and create the sort of the landscape knowledge that can de-risk these investments. We've all seen the effects of climate change, and climate and the impact on food systems over, say, 30 years. We need to be looking at soil health, going back to the planetary boundaries, where we're at a sort of tipping point is on biogeochemical flows, where nitrogen concentrations of soils are at a real precipice globally. Well, with climate change forecasts over the next 30 years, if we look at the Lancet report scenarios, we're in a very bad place. And so this is what I mean. We can use science to inform rapid investment decision-making, to have then overlay that with spatial finance and spatial data planning at a landscape level, digital twin mapping, etc. And then you can actually reasonably quickly know and understand what the best use of finance is in a nature-based intervention. And so that all sounds very complicated, but I think hopefully my colleague from Microsoft will be able to sort of validate this. This is all happening now. It's all, the technology is there now. The interpretation is there now. It's just bringing these types of learnings to the front line of finance and getting the risk appetite in place to be able to finance it in the immediate term.
Yeah, it's really a question of how we partner. And it's really what we're quite pushing hard, both on the open data sharing, but also how we build the indicators, like you said, and the digital twin are here. We can use them to really measure over the time and over a very long duration, both in the past and in the future. And it's really something we are investing a lot on, and partnering with the ecosystem to fluidify and try to get this seamless link between investing, financing, realizing, because there are a lot of actors also that are really working on the ground to really make it real, this natural protection, and they are very important. And so, yeah, it's how we build the ecosystem and work together to, but technology is really there, and even on the risk modeling and this capability to have this very complex systemic and embedded risk modeling between climate, nature, and activities, I would say, it's also going fast forward. So it's more a question of how concretely, and Pierre said it a little bit before, how we cooperate. And I like this word because it's really how we co-work together and we cooperate all together on real concrete projects to test and then to scale.
Thank you, Camille. So we have maybe 8 minutes before to close the discussion, and what I hear is that the genetic code of the Green Swan is a mix of technology, of public policy, cooperation between private and public sector, data, a lot of data, and transparent implementation. Well, I mean, it's the book of John Elkington is really interesting about this concept of Green Swan, because this is a radical view of where we go, and he starts from there, and it's very interesting because what he indicates as well in his book is that we need sometimes to incubate ugly ducklings, really, and love them before to be able to move forward. To avoid black and gray swan. You know this concept of Nicolas Taleb as well. Well, maybe to have a last word from each of you about the Green Swan. What would be, Pierre, your last word about concept?
Just to give an example, to be practical, the next big works that we're starting now will be with insurance company. So it's a collaboration more and more with between the financing and the insurance, while it's mainly driven by Basel III and now Basel IV coming, which is the cost of capital for banks, which is not allowing us to go for long-term tenor. And like Matthew explained, we need long-term tenor. And consequences in order to offset the cost of capital. We are engineering now more and more products around with insurance. So that will be an example. A practical example will be the shipping industry, for instance, where banks were the main financer of shipping, and it's not really an investor business. And if we have to move forward with the regulation coming in place in terms of cost of capital, we will have to re-engineer that. And insurance company is probably a way to go. Implication also, as the ocean is piling up, of multi-development bank and even DFIs in that sector could be also a way to explore, because. Finally, shipping, it's a kind of infrastructure of mobility that we put in place for the trade. 80% of the trade is there. So that's an example of a way and direction where we can go, for instance.
Yeah. Thank you, Pierre.
Okay, thank you. Insurance sounds interesting. It might be something you can collaborate with GCF on.
Another one?
Especially if it's related to ecosystem or coastal insurance, perhaps, yeah?
Yes, we work already on that part. On coral, you mentioned.
Coral reef, but maybe specific for insurance, mangroves, etc. But yeah, in GCF, we mobilized $3 million last year, and hopefully this year we can also increase the financial commitment from various different development partners and continue developing transformational projects across a whole range of different financial instruments for local people and ecosystems and energy, etc. So,
thank you, Chris. James, maybe a last word.
Yeah, I mean, I think from my side, what's critical is continuing restoration, but really scaling that up. And I don't just mean doing more of it, but I mean speeding it up as well. I think that's critical. I mean, you know, I get to go to different countries and see things that have been happening even over the course of the last year with COVID, and you see some really great activities, but are often being misapplied. So I think we need to get a real acceleration around restoring degraded lands, and I think we need to get much far better metrics from the impact of that coming back to us, and using application of technology such as eDNA to be able to better understand. You know, as I think it was Matthew who mentioned improving soil structure is going to be so valuable from a carbon perspective, so valuable from a biodiversity perspective, and a water perspective. So really getting the metrics and the tools working hard and giving that data back to those who can apply it in a way that, and use finance constructively to make the right investments.
Thank you, James. Camille, last word?
As a last word, yes, I would just say that yes, if we want to accelerate, and I think we all agree on the need to really accelerate and try to measure this impact at scale and improve our impact at scale. I really think that technology is one of the main levers with cooperation. That's really the two main levers that will enable us all to achieve. And starting by building this common language and standards, and really using all these new technologies, algorithms, and so on to test and to better understand what is our global impact.
Thank you, Camille. Maybe the last real word to Matthew.
Well, finally, Kamal, thank you, and AFD and IUCN for the opportunity to speak. And any questions what I've said, please direct them to Kamal, because we're working very closely together on a landscape level project called Time for Life. But no, I mean, my final point will be, let's give conservation an ISIN. Let's give conservation finance a ticker to bring in the institutional investor market that hasn't had access to date. And for me, the most real opportunity that we've got in the short term for that is the green sovereign bond market. Let's actually not try and put pressure on nature to generate a return. Let's put that return pressure on the balance sheet of the countries that hold nature in their hand. And I think that's what the green sovereign bond market does, is you suddenly are working with the liable partners being the central banks, being the finance ministers, and not nature. And so I think we're hugely optimistic about the growth of that market. The growth has been exponential. Some of the structures are incredibly innovative. And yeah, I think we should all be very supportive of governments to start launching green sovereign bond programs.
Many thanks, Matthew. Maybe I missed that we have an audience. So if there are questions from the audience, we could take them.
Kamal, apologies. I'm going to have to leave at this stage.
Thank you, Matthew.
Thank you, everyone.
Okay. Yeah, the question was, you talked about risk appetite, but you haven't really touched upon the conditions for the financial sector to increase its risk appetite. Don't you think that the public authorities, public policies, incentives, and an adequate regulatory framework will actually help the financial sector to improve its risk appetite? I mean, there are two ways of looking at it. It's either on the public policy side or a dramatic shift in the demand that might also trigger that. So I heard, more and more, again and again, in the last couple of days, the financial sector saying that the trillions are here, they are available, but they need guidance, they need clarity, they need transparency, and they need the public authorities and policies to be in place as well. And to distribute, to be clear on who bears what risks. So what's your opinion on that?
Okay.
Want to take the question? Pierre?
Maybe I can take part of it, yeah. No, definitely we need, we can see, finance cannot continue to be the only non-disrupted element of the change. So, because today, this is what I say at the beginning, greening the bonds, greening the loans will have its own way to go up to the financing part of the transition when it works well, but the part of the transition will not be able to be financed if we do not go to a transformation of the existing finance. So as soon as we say we need to transform what exists today, it touched the regulatory because we regulated business. Today, the focus has been done mainly on risk management and short-term risk management. And this is probably the consequences of 2008 and crisis where we have been focused. And it took 10 years probably to regulators to solve that problem. Like I just mentioned before, by doing that, we are preventing to do long-term financing because we have put in place cost of capital rules, which today, so do we need to change that? I don't think we will be successful to change that. So what we will have to push now the regulator is to develop incentive mechanism in order to accelerate the process and to scale the process. So if we have to believe conscientiously that we will dismantle what has been built up in the past 10 years in the next years coming, realistically speaking, it will not happen. So what we have to do is to maybe create new areas of working, new domain, I will say. I want to use the word platform, but maybe it's not appropriate because he misunderstood. But we need to recreate areas where we can develop much more innovative way to work, using the carbon, using the carbon as an asset or as a collateral, using blended finance. Because if we have to pile up all the constraints that I mentioned on the different, it will not work. So it's probably first now at the different finance to work now transversally. So between the asset manager, the asset owner, the insurance company, and the banking, because today we are ourselves not even aligned, because we are all by different silos, to see what we can bring in common. And when we have done that in the first stage, go to see the regulator and say, look, today we need this change. And because it's innovative and we can use blockchain already, also we can come with also innovative type of way to follow and to do the transparency. I do believe it's like we are doing for cities in the emerging market. Mumbai, they will not rebuild the old cities. They will build a city next to it. So I think we need to think about the same things. We need to rebuild something which is more adapted to accelerate next, and probably the different contributor for finance will contribute to it in order to make it happen. I do believe this is probably the way we need to think.
Excellent.
Yeah.
You want to add?
Okay, yeah, there's been lots of pledges and commitments made this week, such as Mark Carney and his $130 trillion of assets for carbon neutral investments, which is actually assets in existence rather than investments to be made. I think a little bit misleading when he presents it, to be honest. But a lot of my experiences with developing country, national banks, and yeah, they find it very risky to invest in ecosystems, agriculture, forestry, anything that is maybe risky, long-term. They're more towards traditional investments, concrete, energy, etc. So one of the things that GCF does is provide capital for and technical assistance for national banks to be able to invest in some of these activities. So that's one way I think of really stimulating the sector and helping them invest in some of the more risky, well, not really risky, but risky to the banks program. Yeah. Thank you.
Thank you, Chris. James, maybe you want to conclude?
I get to talk to lots of different investor groups, and one of the things they repeatedly say to me is, Chris has mentioned, we invest in concrete. It's pretty safe. It's pretty secure. We know what we're getting. We know what we're doing. If you want to start invest in a forest restoration ecosystem, it's muddy, it's messy, there's land governance changes, there's complications, people change their mind 5 years in. So I think some of that's also because there's just not enough transparency in the process and understanding what the return will be, what's expected, and how to deal with that from a finance perspective. So I think that's where there needs to be a level of innovation is improving and solving that. So it's not just the overall risk of the investment, but it's the risk of losing that faith and trust with the partners you're working with. And that takes time, but that's where there needs to be some more efforts.
Many thanks, James. Many thanks to all attending this conference, and thank you to the panelists. Many thanks. It was a great moment together, and see you soon.
Thank you.
Thank you. Merci.